Hi, I'm Sarvesh, and in this video, we will discuss on market indexes. If you see news channels, they would say the market has fallen by 100 points, the market has risen by 200 points. This all market and these points all are indexes, and if index moves above, we could say that market has moved. If index goes down, you could say market has fallen. If you see, India has two exchanges, NSE and BSE, and each exchange has a index. Index is something which constitutes of top companies of the index. The NSE index is called as Nifty 50. It constitutes of 50 toply traded 50 companies from NSE. Similarly, Sensex is toply traded 30 companies of Bombay Stock Exchange. Now, what are practical uses of index? This from index you could get a wider information about the market, and if you could say it gives some perspective of the Indian economy. We could say if index is moving up, we could say people are having an optimistic feel about Indian economy. If the index is falling, we could say people are pessimistic about Indian economy. And next use is trading. From index, you could do trading, and it's widely used. And you can't directly do it in equity, like buying and selling it later. You could do it, but it's preferably for long term. There is a separate market called as derivatives market. It's more of contracts and all, especially made for trading. I would discuss on that later in this course. Next is benchmark. Suppose if you are a trader and you have made around 20% profit, and if the Nifty, the index has moved by around 15%, then you could say I have made 20%, that's considered as some good returns. Suppose if you have made 20% and the index itself has moved by 30% in the year, then it's not considered as a good return. You have underperformed that index. So for all this, benchmark is index. You can use that as reference for your trading or some other asset classes, like what is written on real estate and or return on gold compared with return on the stock market. Now, how are these 50 companies selected in this Nifty? They're selected by a method called as free float market capitalization. And in this method, the top 50 highly most large cap stocks are placed in this Nifty, and the stocks are comprises of all the sectors in the market, and the weight for each stock in the Nifty is given with respect to the market capitalization only. If you see in this table, you could see the 50 charts of 50 companies present in Nifty. Reliance, HDFC, Infosys, and there are top 50 companies in the Indian market. You could see the weightages are not equal. If you see 50 companies are there, generally there must be 2% weightage for each company. But since it is divided based on free float market capitalization, the weightage is given based on market capitalization only. If you see Reliance, it has 10% of 10% of Nifty belongs to Reliance. If Reliance moves by 1%, then we could say the Nifty would move by 0.1%. And similarly, for each company, there is different percentages, and they are from different sectors. You could see that one also. And now there's not only Nifty 50 and Sensex, there are several other indexes. And from NSE, if we take, there is Nifty 50's basic one, and Nifty next 50 top companies, toply actually traded companies. Then Nifty 100 is top 100 companies. Then Nifty 200 top 200 companies, like this, so on. For 500 it's there. Then we have even mid cap and small cap indexes. It comprises only of those stocks, excluding the large cap stocks. And cumulatively, a price is set according to the percentage of stocks present in this index. And as the stock goes up, the index also rises up. And there is sectoral indexes too. Bank Nifty, Nifty Auto, Nifty Fin Service, several things. And each sector you will have several companies, and all these companies will come under the index. Suppose if you are thinking this IT sector is going to grow in future, you could invest in Nifty 80, the index. And as it can, but you are not aware of which company will grow in IT sector. So you can generally invest in Nifty 80, it comprises of all the toply actively traded IT companies. So if IT sector booms, your money also booms. That's it for this video. See you all in the next video.